Hello, hello, and we are live. First of all, let me introduce myself. I'm Tanya Metaxa, the owner of Tanya Yadin Photography. And today we're talking about special and interesting topic. We're talking about your future and navigating the hidden risks of life insurance trends. So we have a special guest, and our guest today is Mario Hinojosa, Senior Vice President of Primerica, company that provides insurance, investment, and financial services in the United States and Canada. Now, there might be a legitimate question: why am I talking about about life insurance? What do I have to do with it? And my answer would be that is something I don't know much about, but after talking with Mario, having an opportunity to chat a little bit about it, I found out that not everything is so bright, fluffy, and pink in the land of life insurance, and there are certain things that definitely needs to be addressed, and it's important for all of us to know about it, and that's why we're talking about this topic today. So, Mario, without further ado, I will pass it on to you, and would you tell us a little bit about your background and how you got started in financial services and life insurance?
Yeah, well, thank you, Tanya. Thank you for putting this together, and hopefully we can educate some people out there. I think that's the intent of all this is just education,
I hope
and
so too.
yeah, and just a little background how I actually got started. So I've actually been in the financial services world for 25 years. I went to University of Texas. I've got an economics degree from there. While I was at UT, I was working part-time at Olive Garden. I didn't come up with a lot of money growing up, so had to make some additional income. So I was working part-time at Olive Garden, going to school full-time. And this opportunity kind of landed in my lap to go get licensed and trade in financial services. Didn't really know what I was getting into, but I did enjoy money. I think I would like the whole thing about investing. I thought that was really super interesting. And so I started, and my first year I was able to help out several clients, make some additional income, learn a lot. And that year I graduated from UT with my degree, and then I went full time into this field. So fast forward many years later, that was December 1998 when when I graduated from school. We've been able to help a lot of people with this. Got a great amount of clients. We built ourselves a great business in financial services. But I think the education is the most important part, and being able to obviously get all the certain licenses and certifications, and I'm a certified financial planner as well, and been able to help a lot of people through this. But it's a great field. It's a great field, and I think especially knowing how much people actually are impacted by finances, I think that's a big thing, because that's one of those topics. I don't care if you're an engineer, if you're an attorney, if you're a photographer, or if you're whatever someone might be, finances affects their lives. And so that's why I think it's such a great topic and such a great field to be in.
I absolutely agree with you. And knowing that you're very passionate about what you do, it definitely makes sense, that you talk about it with passion and burning desire to help other people understand the field and, so to speak, play it right? Right. Okay, so let's take it a little bit back and talk in general about why having life insurance is important and who should be looking into buying it, whom it can be a crucial decision for.
Yeah, for sure. So, and when I started, I got my insurance license first, got my investment license, my mortgage license, all those licenses as well. But I did start out with the insurance license and got my investment license quickly thereafter. But who should have life insurance? It's actually anyone that has a dependent. If we have dependents, if anyone's depending on our income, we need life insurance. And a lot of times people think it's just for funeral or what have you, and they think, well, $15,000, $20,000 policy is enough. But really the purpose of life insurance is to replace our income for those people that depend on our income. So take a typical maybe husband and wife with a couple, 2, 3 kids, and you've got the husband making money, you've got the wife making money, and they're providing an income to that family, and they're living off. Most people aren't able to save a ton of money, so they're living on close to 100% of their income. Well, if something happens to either one of those breadwinners, then that family doesn't just lose, say the husband passed away, the family doesn't just lose a husband and a father. That family actually lost his income. And now that wife with those couple, two, three kids is forced to live without that income. So you go from a two income household to a one income household.
Right.
You still have 100% of the bills, but you have less income. So that's the whole purpose of life insurance. It doesn't replace the person, obviously. Like auto insurance, you get in a wreck, they give you another car. They're not going to replace. Right. I don't go give you another husband, but they can replace. Life insurance can replace the income that person was making. So say someone's making $100,000 a year. You've got a $100,000 policy. We just replace their income to their family for 1 year. They've got a $1 million policy that's 10 times their income. We replace that income that they were bringing home for 10 years. And so it's about income replacement. It's also about paying off some of those debts, possibly pay off the mortgage for the family, possibly pay off the consumer debt for the family, fund the education, the college education. So it's really about replacing income. The people that need life insurance are people that have dependents. That's the major need. There's other needs every once in a while, like people that are partners in business, they might need something, but the vast majority of people, as long as someone depends on our income, we do need life insurance.
And when would you say it is good enough, not too early, to start looking into life insurance? Like, what's the usually people have preconceived opinion on, I still have time, I don't need it right now. When is it actually a good time to start looking into that?
Well, just like when you have you need auto insurance when you have a car, you need a homeowner's insurance when you have a home, and you need life insurance as soon as you have someone depending on your income. That's when you look at it. And a lot of times it's going to be early in someone's life, maybe if they get married in their 20s or what have you.
Right.
Well, that's a good time. They're healthy at that time. They've got some good rates that they can get at that time. They have their first baby, maybe in their late 20s or what have you, 30s. And that's definitely a good time. Or even if they're younger, but if they've got a child, that's when they need to look at right. Life insurance. Anytime they have a dependent, that's the time to look at life insurance.
Perfect. Thank you for this information. Now, let's get more into the topic of today's conversation. So, life insurance industry is constantly adapting to shifting markets and evolving risks and everything. So, what are some of the current trends in life insurance policies that we need to be aware of and know about?
Yeah. So like I said, I've been in the financial industry for 25 years. And here recently, ever since COVID, a lot of people that lost jobs during COVID, they started looking for side hustles, as it's called, or opportunities. A lot of people got into real estate, people got into insurance business, people were doing DoorDash, people were doing Uber, they were doing just anything to make some additional income. Obviously, people got on social media, and some of them were able to make some money on social media as an influencer. But one of those opportunities was to go get an insurance license so that way they can actually sell insurance. And so that there's been a lot more people getting into this industry since 2020. Mm-hmm. What happened as far as what's that trend is a lot of them, like here in the state of Texas, you go to a 2-day class, you read a book that's about 6 chapters, about 100 pages total or so. And then you go take a state exam, and that now you're deemed as able to do insurance.
Oh wow, that's it.
That's it. The cosmetologist, I think it might be a 6-month deal. Medical assistant, I think it's several months.
Right. But, you would think.
Yeah, real estate license is definitely much harder than the insurance license. It's several months type of deal. Insurance licenses, I could actually get someone on board today, send them to a class this weekend, and they'd be licensed by the end of next week. So it's just that quick. So
with the speed of light, basically.
Yeah. So the barrier of entry is very low, and it costs just a few $100s to get into the industry. So a lot of people got in. What happened in the last few years is that there's certain products that actually make you a lot more money if you're selling life insurance. Those products are Index Universal Life is one of them. Whole Life is another one. So you have a choice. If you're an agent, you have a choice. You can sell a certain product that makes you quite a bit more money, or one that doesn't make you as much, but is better for the clients. So a lot of people and the managers train their reps, no, sell this one, push this one, push this one. And it's very quite pricey. And that's actually one of those trends, and that those insurance policies are being sold. And they've got some gotchas, some things that people should be aware of that the agents don't tell them about. And that's what we do. We kind of expose them and I don't need them to believe me. I don't need them to believe the agent. I just say, let's look at your contract. Let's look at your policy. Let's read what it says. And that's really how we kind of expose some of those things that they might be doing.
Right. So let's look a little bit deeper into that. What are the specific trends that you're seeing, ones that you just mentioned? What people should be aware of and look into closely before they sign on any sort of life insurance, basically?
Yeah. So first of all, if the person that's selling you an insurance policy starts talking about this being a good investment, understand that by law they're not able to call the life insurance an investment if it's an index universal life, if it's a whole life, they're not able to call that an investment. It will actually say in the policy this is not an investment. Okay, so if the person's actually calling it an investment, then that's your first kind of red flag. Second, if they're calling it an investment, then you've got to look up that person that's telling you that they're qualified to talk to you about investments. You got to look them up. So if you do FINRA, F-I-N-R-A, FINRA, that's the association that governs the investment licensed people, broker check, you just Google it. You can type in their name and see if they actually have a license to do investments. That same website will tell you if they're a fiduciary or not. And that's going to link to the SEC website, Securities and Exchange Commission, and see if they're actually a fiduciary. In other words, do they have to have your best interests when they're doing this? Or is it just basically, if you buy it, you buy it, buyer beware type of thing?
Right, just selling product.
Yeah.
In general.
You're gonna, if they actually say that it's an investment, okay, well, and is this person even qualified to talk to you about investing? Okay. Look them up on FINRA, look them up on the SEC, and you can also see if they're even a certified financial planner. You can look them up on that website as well. So there's things that you can look up. So that's one thing to watch out for is that person qualified to tell you that this is a retirement plan or this is an investment program. Some other things that you look for in these policies and is what we call the 4 funny banking rules. Okay. And 3 of these rules are always in these policies, depending on what kind of policy it is. 4 will be in there or just 3. So the first rule is, I'll use you as an example here, Tanya. So let's say, who's your regular bank, just regular checking account? Who do you bank with?
Chase.
Okay. Not to say any other bank is bad, not to say Chase is good. Let's just call it Chase. Okay. So you're with Chase. If Chase has a sign on the side of the door and says, we've got a new savings account, and Tanya, we want you putting away $300 a month. Okay. And there's a little asterisk, and you say, well, what's the asterisk? Well, it's got 4 rules. Okay. You're doing $300 a month, but it's got 4 rules. Would you want to know about those rules before you actually started the savings account?
Absolutely.
Yeah. And so what if they told you that the first rule is that you're putting away $300 every single month, but after 2 full years of putting your money in there, you've got $0 in your savings? How would you like that rule?
Oh, no. I wouldn't like it at all.
You'd be like, no, I don't think so.
Right.
And if you walked in there 2 years later and found out that you had no money in there, you'd probably talk to a manager and say, hey, what's going on?
Right.
I put in $300 a month, $3,600 a year, $7,200 over a 2-year period. I've got no money in here. And you'd be quite upset. That's the first rule. The second rule of this bank is that long term, it only really grows at about 1 to 3%. Now, we talk to people about mutual funds and ETFs and portfolios and investments, and those pay 9, 10, 11% average per year long term. But would you want to settle for 1 to 3% if there's 9 or 10 or 11% available?
No, why would I, right?
Exactly. That's a second rule. The third rule is that if you ever want your money out of this Chase bank, let's just say that you have, I don't know, say $20,000 in there later on. You actually want your money. You go in there and you ask for your money. And they say, no problem, Tanya, fill out this loan application. You say, no, I want my money, my $20,000. Well, we'll give it to you, but you got to take it out as a loan and you got to borrow your own money. Would you ever want to have to borrow your money when you have money in there?
No, absolutely not.
Right? And the last rule, and this is in every single one of the whole life policies, a lot of the other ones, is if you die, the bank, in this case, let's call it Chase, actually keeps your savings. They know that families fight over money. So they don't want you, your family fighting over the money. So whatever's in there, 20
So we'll
grand,
just
50
keep
grand,
it. We'll
we're
just
just
keep
gonna
it.
keep it. Would you ever sign up for a bank that had any
No.
of those rules? No, right?
Absolutely not.
Well, these index universal life policies, these whole life policies, they have at least 3 out of the 4 rules. Okay, so
Wow.
the first few years that you have the policy, you want to actually access your money, and because of setup charges and fees and all that kind of stuff, there's no money in there. That's called the cash surrender value. So and again, nobody has to believe me. Nobody has to believe another agent. You just look inside your actual policy, look for surrender charges or look for cash surrender value. Look how much there is in the first couple, 2-3 years. There's really nothing. And you say, well, I've been putting away into savings because it was sold to me as a savings. I've been putting away into the savings. I have no money in here.
Right.
That's a very disturbing rule. And then that it doesn't really grow, even though the agents will say, oh, this pays 4%, or this pays 6%, or this pays 7%. When you actually look at their tables, they're either their guaranteed tables that's inside the policy or their illustrated tables, and you look at how much someone has put in. I actually have a quick little example of a policy here. And in this one, this client was putting in $162 a month. 35-year-old lady was putting in $162 a month. And on their guaranteed scenario, what's actually, and we buy insurance for their guarantees, on their guaranteed scenario, after putting in 10 years of money, she would have put in $19,525, and she's guaranteed to have $10,303. Okay, that's how much she's put in 19,000, but on the guarantee, she's got 10,303.
Interesting.
And so if someone had a child, like my wife and I, we've got two daughters, so 16 and 17. But if my 17-year-old comes to me and says, Dad, I'm thinking about putting away some money, and I'm going to put away $19,000 over a 10-year period of time, but I'm going to have $10,000 after that period of time.
Right.
I would say
that does not make any sense.
I would say, what math class did you take that this makes actual sense? Okay, and that's on the guaranteed scenario, and that sometimes the agents will tell you, well, yeah, but it will actually do better than that. On their best case scenario, that's actually like in this particular one that I'm showing you, their best case scenario, it says you'll have $14,399, but they still put in.
It still does not, right?
You still have lost money.
Right.
So the agents will tell you, oh no, that's growing, because there's a little chart right here that says it's growing at 5%, 6%, but you still haven't made a profit on what you've put in. And even after 20 years in this one, client would have put in $39,000, and it grows to $50,000. So it did grow after 20 years on the best case scenario from $39,000 to $50,000. But what I believe in is putting your money into a term life insurance policy. And that term life insurance policy for the same $250,000 on this lady would have been, give you that. So same $250,000, instead of paying $162 a month, would have been $30.84 for $250,000. So if you wanted life insurance, $250,000, they're charging $162 a month. You can get it for $30 a month. You could probably even get it a little bit less, depending on her medical condition. But
what a difference!
Yeah, so $162 to $30. If she would have just bought the $30 policy, after 20 years, invested the $131 at 9%, that actually grows to $88,000. So she would have had way more than just the $50,000.
Right.
Instead of $50,000, she would have had $88,000.
Right, and she would be paying less, way less than.
Yeah. So all it is, it's kind of like our cell phone plans. We used to have cell phones many, many years ago. Some people may not remember this, where you're just paying your bill and you don't even know how much is going towards the actual cell phone and how much is going to a wireless plan. Now we know how much is going towards your cell phone, how much is going to wireless. So if you have a paid off phone, then you're not paying for the phone anymore. That they basically unbundled that. We know exactly where it's going. So what we believe in as far as life insurance, the same thing. You got to just unbundle it. Buy term insurance, low-cost term insurance. That's the same thing that Dave Ramsey says, Susie Orman says, Clark Howard says, Consumer Report says, Personal Finance for Dummies, Eric Tyson says this. Kiplinger's, they say buy term insurance.
Mm-hmm.
We believe just buy some term insurance, invest the difference, put that into a Roth IRA. If you don't qualify for a Roth IRA, there's other things you can do, but put that into a Roth IRA. As long as you make under $218,000 if you're married, you qualify for a Roth IRA. So a lot of people do qualify, and you're going to be much, much better off. So that's what we talk to people about.
Right. Yeah. Wow. That my mind is blown by the information you provided. There
Yeah.
are a lot of red flags to recognize, and really before signing anything, go and check off everything that is in the policy that is offered. Look up the agent, right, that is trying to sell it to you, and recognize every red flag there is.
Yeah.
And if in doubt, have a second opinion, right?
There you go.
Have someone else to look over it.
And make sure they're qualified.
Yeah,
Make sure
are
they're
there any
qualified.
other measures that can be taken to prevent from this to happen, like the worst case scenario to happen?
Well, I think just if you had a medical issue, you wouldn't talk to maybe someone who's not licensed in medicine. You talk to someone who is licensed. So again, when these insurance agents are trying to sell a policy that's supposed to be for retirement, supposed to be a great investment, just make sure you're talking to someone who's actually investment licensed. Make sure that they are not just insurance license, investment license is more. If they're a certified financial planner, even better. But talk to someone who's qualified to give you the financial advice. I think that's one of those things to look for. And there's a lot of policies that are sold in the United States. There's every single year there's over 10 million policies sold in the United States as far as insurance, just individual policies. Over 6 million of those are actually the whole life, the universal life, index universal life are those type of policies. So we got 60% of all new policies being sold out there are the kind that are more expensive, that you could do better by separating things, by having your term insurance in one place, your investments somewhere else, and growing those. So you definitely have to watch out for that. And if you ever feel that an agent is actually lying to you, this is something I let people know. It's like, if you feel they're actually lying to you, then just have them do this. Say, put that in writing for me. Please put your name, your signature, and your license number. So like when they say, this insurance is an investment. All right, hey, no problem. Hey, if you really believe that, would you do me a favor? Would you just put that in your writing, date it, put your name, your signature, and your license number for me.
That's a great advice, right? Yeah. Because they wouldn't do it if that's not true, or they're not qualified to offer you to. Yeah. Okay. Yeah, that great advice. Thank you so much. Yeah, now, next question would be, if someone is actually looking to buy a life insurance, but they don't know what are the first steps they should take. And obviously, if you go, search internet, there would be 10 million companies popping all over your screen with paid ads and whatnot. But there is a good chance that you will actually reach out to one of those companies you shouldn't be talking to about life insurance. So what should be the right first step to take to ensure that the life insurance they're buying is actually a great value, the advice they get has a great value, and everything?
Well, here's the thing: if make sure it's term insurance. TERM, 4 letters. The more letters they got, the bigger
the more confusing it is.
Yeah. So when they say this is a flexible premium adjustable life, when they say this is a whole life, a variable whole life, an index universal life, it's just term insurance. Okay. And make sure it's the right length. Okay, because you can buy term in 1 year, 5 year, 10, 15, 20, 25. How you determine the length is based on how long your dependents are going to be really in need of your income. And then make sure that you don't buy the insurance agent telling you that you need life insurance your whole life. You really don't. There comes a point where you become self-insured. In other words, when you're young, you've got your kids, you've got a mortgage, you've got all the responsibilities that we all have. But then as we age, the responsibilities go down because our kids get a little bit older, our debt should be going down, our investments should be going up. So we have more need for it when we're young, less need for it later. At age 65, you don't need $1 million policy. You need $1 million of cash. And because you can go to a grocery store with $1 million policy and you can't buy anything, but you got $1 million cash, you can go buy something. Okay.
That's a good one.
But at age 65,
Right.
you definitely need money. Okay. So at
Right.
the same time that you're doing your term life insurance, make sure you're investing. Any insurance agent that tells you that a 401k is the wrong place to go for investing, you should be investing in a 401k at your work if it's being offered, especially if it gives you a match. You should be doing a Roth IRA into the right type of mutual funds or ETFs, all that kind of stuff. So where does someone go for advice? I think that, and I know a lot of people don't read books and all that, but Personal Finance for Dummies. Don't let your friends know that you have it because they'll think you're a dummy, but you go buy that book. Great author. Don't keep it on your coffee table because you're going to be attacked by people. But that's a great little book that teaches you a bunch of stuff. Dave Ramsey's book, Susie Orman's books, those type of books, those are great books. And obviously we're always going to be a resource over here with my firm as well. But look at third-party things. I love looking at third-party things. People that don't make a profit off your decision. So that's important. Like look at those third-party websites. Read who actually wrote the article,
Right.
or all that. Consider the source, right? If they're telling you
That's
that,
true.
that universal life is good, and then you read at the bottom that they actually sell this. Well,
there you go.
yeah. So that's important. And if you ever do work with a certified financial planner, they are fiduciary, and that always does help as well.
Good to know. I think that you've provided a wealth of information and really basic things that we should be looking into. And I knew nothing about it. So thank you for sharing. It's really important to know. And last question for you. So if someone wants to consult with you, to reach out about any of what we were talking about, or maybe if they have a policy but want a second opinion on that, would they be able to reach out to you and ask you to look over it? Okay, so how do they do that? How do they reach out?
Well, obviously they can just reach out. I think this is going on LinkedIn. I think that's going on some other social media platforms. They can search me there. You can ask Tanya for my contact information on there.
Yes, anytime.
Whatever you want.
I'll be happy to
connect. Ways.
Right.
You can certainly search me on the CFP website. You can put my name in there and get all my contact information as well.
And you know what? I'm thinking that after we wrapped up this live, we will go ahead and put the links to everything we're talking about into comments so people can easily find it and read about it, search the current agent, or reach out to you if they need to, right?
Yeah, sounds
Let's
great.
do that. So it's going to be out there. Okay, thank you so much for joining me today. I've learned a lot, and I hope that our viewers did too. And it's going to be out there for them to rewatch if they weren't able to join us today. So thank you for joining me for this conversation.
Thank you for hosting. I appreciate you.
Thank you. All right. Bye.
Bye.